Podcasting from a remote location, somewhere deep in the heart of sunny Tel Aviv, this is Crypto Characters, and I'm your host, Jason Nagy. Our guest for today is Alon Tzipory. He's a serial entrepreneur. He's the founder of Bridgez, which is an Israeli fintech startup that focuses on credit solutions. Alon, welcome to the podcast.
Thank you very much, Jason, for inviting me. Good morning, and happy to have you here in Tel Aviv.
It's always good to be here.
Yeah.
So tell us a little bit about what you're up to, what Bridgez is. I want to get into how you got started. You have a number of very successful companies that you founded. So let's start with what you're doing right now. So
Yeah.
what is
So
Bridgez?
Bridgez is my current venture. We're running for the last 12 months seriously. We've been around in the fintech industry for the last 2.5 years, and we're looking into what is interesting us and what is has to be fixed. And what we figured out that all the space of credit and that instrument is lack of efficiency and lack of innovation in the broadest sense of the word. Okay, so Bridgez is focusing on giving the opportunity for new types of credit and loans instruments, as well as the ability to gain better results for lenders and borrower together. So they're able to manage better the risks. They're managed to identify the exact conditions or the best conditions for both sides for both of them in order to make an efficient and profitable and accessible loans.
Okay, so let's talk about loans for a second, because it strikes me that that's probably the biggest place where you'll find what people call a credit solution, right?
Yeah.
So tell us a little bit about the way loans work, and I know that you innovate both in the U.S. and in Israel, which is one of the nice things about having someone like you in the podcast.
Yeah.
So tell me a little bit about the way credit works, and I imagine that there's some similarities.
Or doesn't work.
or doesn't work, and I believe that there's some similarities based on our conversations that I think we can apply to the U.S. But why don't let's talk about Israel. You can analogize it to the U.S., and then you can kind of talk about the holes you see, the problems you see, and the ways that you look at fixing it.
Yeah. So I'm not sure that the condition in Israel or the credit market in Israel is similar to the one in the States. Actually, it's more similar to markets like in United Kingdom and other places. But 2 years ago, we've started a venture of credit and underwriting operations in the States in the segment of real estate. And this is
one of my favorite topics, real estate. So I'm excited.
Mine too. And what we've and it's totally different. You got to understand. So retail credit and loans, it's totally different from real estate and securitization market and industries. And
that's where you came from. You came from the securitization industry.
Yeah, that's true.
In the U.S., right?
Yeah, that's true. That was the initial venture. Is where we were starting. We were identifying a lot of inefficiencies in the process of both underwriting those credit and loans, but also in the servicing phase of the loan life cycle. And
this is in the real estate.
That's in the real estate.
Right? Okay.
So
and you're doing that as Bridgez. That was what Bridgez was doing, or is that one?
Yeah, that was Bridgez was starting to develop the technology around around this space.
Okay, so the technology that Bridgez is currently working with, and that's Bridgez with a Z, right?
Bridgez with a Z.
Okay.
Yeah.
So Bridgez kind of started in the U.S. looking at based on your real estate experience in the real estate credit markets, and you developed technology. So why don't you tell us about that technology? I'd love to hear about it. What did it do?
Yeah. So first of all, I think that first and foremost is we were coming to fix the inefficiencies in the process. So
give me some examples.
I will give you some examples. So if let's say you wanna issue a mortgage-backed security, right?
Right.
So this is a process that's compounds of a lot of components with a lot of stakeholders. Like there is the issuers, and there are the underwriters, and there are the investors, and there are the investment banks in the middle, and there are the broker dealers, and there are the rating agencies.
Don't forget the lawyers. They're also in there.
And there are the lawyers.
There's a lot of noise in that.
And there are the accountants who are building the models and everything. And every one of those participants in the game put a lot of resources to try to identify the opportunity, to map correctly the model, or to build, actually, to build the model. And then you have like an offline process that everybody has its own models with its own risk factors and attributes and parameters, and there is no,
by the way, that's a big
single point of truth. So we're not talking about the same thing. You are, as an issuer, you have your own model. I'm an investor or underwriter, I have my own models. As a rating agency, I have my own model. Sometimes it's collapsed together, sometimes it's not, and there is a lot of deficiencies between those models.
I like to call that information asymmetry. It sounds so smooth, but it's really what it is, right?
Yeah, you're totally correct. It's information,
and that's what blockchain in Israel. It's blockchain, right? That's what blockchain does to fix it. Correct? I mean, it's a big.
Yeah. So blockchain is a big name. I think that it's a great technology. We have a lot of experience with many projects on the blockchain space, and I think that what makes a lot of sense in this use case is that you really can get everybody on the same page, so everybody can see the same picture, to have the same information. There is no asymmetry in information. Now, and there is a transparency for all the stakeholders. It makes a lot of efficiency in terms of, just take, for an example, the process of paying back to investor on a monthly basis their fixed income, right?
Right.
So
the investors, really, they're bondholders, so it functions like a stock.
Yeah, the bonds or the MBS holders, or it could be anybody else. But it's so inefficient that you can see like hundreds or thousands of people that are just coming day after day to work and moving papers from one side to another, and have to confirming and to verify and to validate everything. And the last time I saw some stats around it, so there are markets that the time that it takes from a family in Alabama paying their monthly repayment on the mortgage until the time that the investors, the bondholders or the MBS holders, are getting their monthly income it may take up to 3 weeks, which is insane.
Yeah, I mean, but wouldn't you want the money sooner?
So I would like the money sooner. I would like, as a servicing company, I would like to spend much less resources, time and money on those reconciliation processes. Think about it, that I can now, as a servicing company, not dealing with reconciliation all day, not spending a lot of money on reconciliation and on the process, but I can now identify new revenue generation models on top of the data I have.
What do you mean by that?
So,
and actually, let me ask you a different question. Question I have for you is, I love all the inefficiencies, but were you able to implement any of this in part of your structure? And we can talk about that as part of your solution. We can talk about that in a second, but let's just talk about, the question I asked before that. Sorry to interrupt. Blockchain efficiencies.
So the fundamental value that you can get out from any blockchain or most of the blockchain technologies is the real-time and immediate settlement and clearing process.
And were you also talking about some statistics about how many people that they have working? Was that what we were on before I interrupted you? I really shouldn't do that. That's my bad.
Statistics about what again?
How many people? I believe you were talking about how many people are in the back offices working on all of these processes.
Well, honestly, I don't have exact numbers, but I know that if you're looking on the big players in the industry, so these are not small companies, right?
Right.
It's big companies that are employing hundreds or thousands of people that are just dealing with managing and moving these pieces from one point to the other in order to facilitate all the origination, the underwriting, the securitization that we did not talk about, the servicing, and the underlying collaterals and all those titling processes and everything. So it's a huge industry, and I think that the opportunity for all the players with blockchain is not that blockchain will replace them, but will be able to bring or will create new opportunities for them to create new revenues, revenue streams from, I would say more advanced services rather than just, moving papers from one side to another.
Okay, so when you say advanced services, I'm not trying to press you, but I'm curious because I want to hear what your mind thinks of when you think about advanced services.
So think about it that with underwriting, you can better predict risk model and you can better predict the risk by establishing new scoring models and pricing models and collection models. So think about it. If I'm broke and there is no way to get any dollars out of me, would you as a lawyer advise your customer to put money, time, resources to try to collect from me the money?
No, I would not.
So we're not there today, right?
Right.
So I think that, and now we're speaking about the other part of what we're doing. So we've been working on the last 2 years on developing those kind of models that are
You mean the new scoring models for risk?
The credit scoring model and the pricing model in mainly, and we've been working on huge amounts of data, and we were processing and analyzing. We have a big team that is compound of bankers, active bankers, directors in banks here in Israel, former HSBC director, chief risk manager. We have doctors from the academy that are working on the data analysis and statistics models, and we have large numbers of engineers that are specializing in machine learning and technology altogether. So I think that what we were trying to achieve on the last year and a half or so is to come up into or to build an operation and technology that fits together and is comply with financial institutions' expectations like banks. So we know how the banks are thinking, we know how the banks are working, we know what they are looking after, and for different reasons, those organizations are very conservative with their approach to innovation and new technologies.
By the way, I hear that about banks worldwide. That's the description of every bank.
So if you're looking onto a common thing between Israel and the States and probably elsewhere, here you go. Thank you.
Sure.
So, and we understand that.
Okay.
So we're not trying to tell them, okay, whatever you've done until now is bullshit and worth nothing, and we have the new magic powder for you. Just throw it on your customers and it will magically fix your businesses. No, it's not the case. But we're working hand to hand with them. We're working here in Israel with public companies, and we have in Israel, by the way, a new act that was set up almost a year ago.
Okay.
And it's halfway going to where you have in the States the credit scoring system.
That's probably very good for borrowing.
Yeah.
If you don't have that already, how did people? So you didn't have I think you referenced it too when we spoke last, which was FICO, right?
Yeah.
So there's no FICO scoring in Israel.
No, there is no, and
so
the situation is abnormal. It's totally insane. So.
How do banks lend? I mean, so every time they've got no baseline that they can use. Mm-hmm. There's no credit reporting agency that they can go to say, hey, this guy is not a credit risk, or this lady has paid all of her bills for the last 40 years without a late payment, and that's the highest credit score you can have. They don't have that here.
So they have and they don't. And what I mean. So. I think that's one common fact that everybody can agree on is that both in Israel, I know for several countries in Europe and other places around the world, the credit market, if we're looking into the retail credit market, in Israel it is concentrated around the big banks. And the banks are responsible for over than 85% of the total credit, the retail credit market here in Israel.
Does retail credit include credit cards, or is that something else?
No, it's include.
So retail, when you say retail credit, 85%, that's
By the banks.
That's just for loans.
The other part is the credit card companies are responsible for, and non-banking lenders. But 85% out of it directly is being lended and controlled by the banks. And
how do they evaluate? Do they have a system where they all talk to each other?
No, they don't. They are functioning as an isolated island. Everyone has its own data and its own models and its own statistics. They might be looking into mainly bad data, but they are not able to look onto other good data and evaluate it where it comes to things that are going outside of their scope. So
define
if I'm
good
a
and bad
customer,
data.
I'll give you an example.
Okay, good.
I'll give you an example. So if I'm a customer of Bank A, so Bank A have almost everything on me, like a long history. He has my income, my expenses, my debt, my loans. He can analyze my consumer behavior practices and so forth and so forth. But it doesn't know anything of what is going on my credit card. It doesn't know anything if I have another bank account with other banks.
So that means that you could have, let's say there's a woman who's got a whole bunch of credit with Bank A, and there's really only 3 major banks in Israel, right?
They are too big.
Too big? Okay.
Only too big. And there are like another 4 or 5.
Okay, so I've got all of my, woman A has all of her loans, her consumer loans, her mortgage with Bank A. She has credit card debt with a credit card company, right?
Yeah.
And then the credit card company has its own file on her.
Sure.
She doesn't pay her credit card debt, right? So but she pays her regular bank debt. She pays her mortgage on time. She pays her auto loan on time, but she's not paying her credit card bills. There's no way that Bank A right now knows that she's defaulted under those loans.
No, there's no way.
Under her credit card payments.
Yeah.
Wow. So enter Bridgez.
By the if we're looking into the formal law and if they are exchanging or not exchanging information between them, so basically or theoretically they are not. Some of the banks are here, and it is something that is being changed now. It was enforced by the regulators. They are holding major equities in the credit card companies in Israel. So there might be some information exchange between them, but obviously there is no information exchange with other competing banks.
Gotcha. So now there's this new law was passed.
Yeah. So there is a new act that was passed that requires banks and many other financial institutions that are lenders to provide such information, all the credit information they have on customers, into a one central database that is managed and controlled by the Central Bank of Israel. And
what's to be done with that information? Is that to be used to turn into FICO scoring effectively, or what?
So the purpose of the act is to increase competition, to provide a better credit information, both for borrowers and customers, but also for lenders and other participants. And the way they are doing it is that you can either request for your credit information. You can delegate this request to some entity, like I'm going to a car agency and I want to buy a car and I want a financing on it. So the car dealer or the lending company that works with this car dealer I can delegate them to access this database and get the credit information on me. It's named with all the information and everything is there.
Strikes me that it will Americanize lending for Israel, which has its pluses and minuses. It strikes me that that's going to also open up a lot of opportunities to people with good credit. I would imagine it's going to cost less. I mean, has this been implemented, or are these
as
just...
opposed to in the States, banks or other businesses are not allowed to buy my data.
Okay.
So I can specifically, in a case-by-case basis, authorize a business that I want to lend money from to access this information and data. This is one implementation of the law. The second one...
By the way, the U.S., you have to, if you don't authorize a credit report, a credit check, then it's a violation of the law, and there's penalties for the entity that seeks that credit request. So when you go to get an auto loan in the U.S., they actually have you sign a form giving you permission to look at it. So it's somewhat similar to the Israeli system, but
banks in the States can buy those lists, right?
No, you can buy data on but a lot of times it's stripped. You can't just get all the data on Jason Nagy. Like you can't really do that.
Yeah.
At least I don't think so. I'm going to be interviewing someone who's a data privacy specialist, so I'll find out the answer very soon in a couple of episodes. But anyway,
but the other implementation, and I think it's more important, is the ability to extract anonymous data by a regulated specific entities like credit agencies that are going to utilize or work with our technology in order to build the credit scoring models and algorithms. And then lenders...
Your technology is going to be used for that?
Yeah.
So tell me this. I'm very curious about this. All right. And you may not... This actually may be something that you can't talk about because it's somewhat like a trade secret. So if it is, then don't say anything. But what do you look at if you don't have a credit scoring system? What data points do lenders look at to determine if they can make a loan? Because I'll give you an example. There's about 5 lenders. They're kind of like alternative lenders in the U.S. Then they're fintech companies, effectively, and you don't need a credit history. You give them whatever data points they ask, and then they will determine your risk of repayment or not. So are you doing something like that? Is that what Bridgez is up to right now?
So the model that we've developed is compound of 2 major elements. One is an AI based, and the other one is classic statistical algorithms that are used with lenders and banks for like decades by now. And the combination actually, so I guess that it goes with most of the regulators around the world. When you are a regulated institution and you are being supervised and you have to get the approval of the model that you're working with. At least in Israel, it's this way. So a bank is developing its own model, and it has to be inspected and approved by the Central Bank of Israel.
For the creditworthiness determinations?
Yeah.
Oh, that's actually somewhat of a relief.
Yeah.
If you, I mean, I don't know that I trust government so much anymore,
and then, in order to be compliant with their requirements, you need to be able, statistically and mathematically, explain it or prove it. So
then these aren't really trade secrets.
You know, in most cases the models are, let's say I'm looking into the age attribute, okay? And the age attributes contribute X percentage into the pricing, or one rank or rank X on the credit level. Now, if I decide to divide the age to certain groups, I need to explain, or I need to be able at least to explain, why did I and let's say that the group or the average is 0.5 point%, okay? And now if you are younger, it increases in 0.02%, right? And if you are older, it is reduced something, okay? Now I need to be able statistically to explain why did I choose that this group between the age of 18 to 25 is the group that I was deciding, and I did not decide like 18 to 30, for example. Or why did this group is different from other group, so the pricing that derives from the model is different for these groups. So this is an example of how they are looking into the model and what they are requiring there.
Okay, gotcha.
Now, if you're looking into what kind of information you have on those databases, it could be in the States or any place elsewhere. So each credit record compounds of hundreds of attributes. It could be age, salary, residential location, and expenses, credit card information, loans informations, repayment information, default information, a lot of things that you can, so you can find yourself with hundreds of different data points that you need to analyze. So the old school model was that ignoring much of it and trying to be focused on what seems to be important, and then to just, it's a trial and error process with a lot of statistics models that you are applying the information to and you see what you get, and you're applying the information to and you see what you get, and then you are comparing it to a previous information that you have and to see what you got up to, right?
Okay.
So what we've done, we've been able to show that the combination of the AI plus the classical statistical models combined together are able to show a better accuracy in the prediction of the credit score and the pricing.
By how, I'm curious. I know that there are levels, so how is that measured? Is it 50% more accurate, or is there some other metric that you use to kind of show how much better it is? And I'd love to hear how much better it is.
50% is effectively nothing, because it's like 50%, everything could be either yes or no.
No. When it comes to numbers, I'm not your guy. You had to help me get the mics working here, so I'm not a number tech guy.
Yeah.
You tell me what that stuff is. I don't know.
So we were able to predict scoring and pricing at the level of beyond 99% accuracy.
that sounds really high. So what does that mean when you say 99? Do you mean that
It
as
means
far as
that
a default
our
rate?
model was working in such a way
Okay.
that the outcomes that it was producing were compared to past information that it was analyzing, and in 99%, we were able to identify the effective grade or pricing that was giving in the to these credit deals or loans in an accuracy of 99%.
So I think what you're saying is that you took old loans or pre-existing loans,
Sure.
and you got all the data that you had, these hundred or hundreds of points of data. You ran them through your algorithm. You used the statistical model, and you were 99% correct as to what the default rate or the repayment rate would have been in all those models.
Yeah.
And do you use other metrics? Is it just default rate and repayment rate
No.
or is, well, not other metrics, I said that wrong, but as far as what the 99% covers, what does that 99% rate cover? You were right on the default rate, repayment rate, other things. What else is in there? I'm curious, because that's a staggeringly high number.
So at the moment, the two most important data points that lenders are care about is the scoring level
Okay.
and the interest rate, the price.
Right.
So when I say 99% accuracy, it means that we have extracted the interest rates and the grade of the past loans data that we were looking at.
Okay.
And we were taking off the default rates or the payment history and everything that you can calculate, the default rates or the repayment rates or prepayment rates. We did not talk about prepayment rates, but it's a big deal with lenders because
Right.
they are building their models under the assumptions of some prepayment rates, right?
Oh, they are?
Of course.
See, in the U.S., there's you know this, but at least in the real estate market, which is my specialty, not the consumer market, there's a prepayment premium, which is the idea that you don't really want prepayments because you've modeled out what the income is going to be off of that loan and the percentage rate, and if it's paid off early, then you're losing 1 year's worth of whatever that interest rate is.
Yeah.
So in the consumer credit market, it's actually different. They want prepayment.
So it's there are some loans that it is similar to what is going on in real estate.
Okay.
When you're going to loans that has some fixed rate components in it, you must take into consideration prepayment rates. Because the cost of the money, which is the underlying assumption, is being changed. But if it's a variable interest rate,
You mean the cost of the money stays this? Oh, the cost of money is being changed when you prepay it. That's what you mean.
Yeah. So if my assumptions were like you're going to take this loan for 10 years or 5 years
at 5%.
at 5% fix,
Right.
okay, and the cost of the money was 1%, okay, or it was like 3%, right? So if the cost of the money at the prepayment date is less than what it costs to me as a lender, I'm happy, right? But if the cost of the money is higher, it means that it costs me more to give you the new loan or
Right. So I think then and this is more for my own clarification, but what you're saying, when you prepay a loan with a fixed interest rate, it changes the financing of the loan.
Yes.
Whereas when it's variable rate, it doesn't matter because it's going up and down with the times. Is that the point that you were making that I interrupted you on?
Yeah.
Okay, so that's a really good point. I never thought about that, but It's a perfect point. So there are these loans out there that actually, consumer loans that are at variable rates where they want prepayment.
Yeah, so at least in Israel, what we see, and I think that in Europe too, is that most of the consumer loans are variable. Okay, so the argument of
I think that's also in the
prepayment,
U.S. too.
yeah, I think so too.
Yeah.
And so the point around the prepayment rate in consumer loan is less weighted than in retail loans, for example. But the credit score, the ability to predict whether you are as a borrower will get into a default or not, and the pricing model that is attached to these risks these are the two important points for any lenders. I guess that in the States too.
I know it in the States.
Yeah.
That's absolutely true.
So from conversations we had with lenders in the States, and we've quite thank you. We've been quite investigating the model in the States too. Is pretty much similar. So back to the point, it means that while we're taking off those outcomes from the data and the data sets that we were looking at, we were being able to predict it and to get the same outcomes that essentially was in reality in an accuracy rate of 99%.
That's unbelievable. That's really something else.
Yeah.
So now you've got this ability, and what are you doing with it? Are you now going out and are you having discussions with lenders about it? Are you focusing? I know that your focus right now is Israel, but I also know that you go out to the U.S. a lot. Are you using this model in other ways? Tell me how you're applying it.
Yeah. So I think that we're in the stage that we are able to prove the technology, and what we're doing now, we are working with credit agencies here in Israel. We're working with non-banking lenders here in Israel, and are establishing the lending operations with those non-banking lenders, or the credit scoring technology platform with the credit agencies.
Excellent. Now, I also want to talk about millennials, right? Because all the lenders, I know, right? Those millennials. It's okay, millennials. We love you.
We do.
But by the way, I don't know what the technical definition of a millennial is, but for me, it's anyone that was born after the Karate Kid came out. That's just that's my marker. I don't know why.
I think it's a good definition.
At some point, Ralph Macchio says in one of them, "Come on, this is the '80s," and that was such a pivotal. It was so emblematic of that time for me that if you were born after that, then you have to be millennial. But
I think that
they're changing the way the lending world works, or at least all the lenders I talk to seem to be gearing up for it because they're expecting a giant change. So can you talk about what you're seeing and what you've seen?
So yes, what we're seeing is, and I think that I'm not saying anything new that you or anybody else could identify by himself, is that the banking industry is being changed, is changing already, and you can see more and more traditional banking services that are now being provisioned elsewhere. You can see all the payment systems with the tech giants and all the others, right? Who was thinking about that Google will give you the option, or Facebook or whatever, to pay throughout your messenger to your friends, and social circles,
Or
right?
to buy books on your phone, right? I mean, you're right. Yeah, payments, everything.
Payments.
It's a payment platform now.
Yeah, it's a payment. So there is the consumer merchant model that is with us like 25 years by now. Yeah, since the beginning of Amazon. But
Right.
but nowadays you're looking and you're seeing different services. So it's not just about payments between people, but you can see solutions like Revolut in Europe, and I know that you've mentioned one you have in the States too, and here we have Paybox, and all those kind of applications are providing,
Venmo in the States, right?
yeah,
Mhm.
and they are providing banking services. So with
They are.
Revolut, it's not just payment. For example, I can have a debit card that is connected to my Revolut account.
Right. Oh, wow.
I can transfer money. I can use my debit card.
Actually, in the U.S., I think PayPal has something like that too now, or at least you can. It holds an account there. I mean, I got a refund of something, and it was sitting in my account. I was too lazy. It wasn't a lot. I was too lazy to take it out. I just kind of used it. But yeah, it's their banks, and that's someone new in the States. I don't know when PayPal started doing that, but it's within the last 3 to 5 years it happened.
And the same thing will happen with credit.
What do you mean? Tell me the future.
So well, I estimate that what will happen is that if we're talking about millennials, they are the prime generator of this transformational change in services. So they would be able to take a loan in a manner of a click from their mobile device or elsewhere, whether they are in a retail bricks and mortar or sitting on their desktop and buying something. They just would be able to finance the purchase through a seamless credit and loan issuance process.
And that's separate from just using a credit card, because everyone already has credit when they get a credit card. But they'll be able to, if they're if they want to lease a car or finance a car, they'll be able to just click on a button on their phone and they're going to get credit that way. Is that what you mean, or is it more than that?
There are more and more use cases. Think about all the big retailers in the States or elsewhere, right?
Right.
Now you're getting into a electronic store, okay?
Right.
Best Buy or whatever, and now you have an iPhone that costs $1,000.
That's what they cost.
Would it be easier to, by a click of a button, pay like $10 a month or $20 a month?
Actually, you know what that's going to do? Well, that's going to completely disrupt your ability, the phone company's ability to make money on their phone programs. Because I don't know if you, in the States at least, the phone companies completely revised everything, right? So now you don't just go and you get a phone, and it wasn't that big of a deal, and then they would give you a discount on it, and then that would be yours. And now they're trying to do these programs where they have buyback, phone buybacks, and the phone companies are financing them, and they're pushing the financing. They took away the old programs, so that's how they're making money now, and they're taking these phones once they're done and putting them in the secondary markets and all of that. So that will actually change the way phone companies are doing business in the future.
Yeah, and I think that's what will happen. If you remember, on the early days of mobile internet, you could just.
When was that? Tell me. I mean, I can't even remember when that was. Was that like 5 years ago, or?
No. Early days, we're talking about the walled garden, close net that you were able to surf only on the websites of the mobile operators or the portal that they've provided to you.
I don't even remember that being a thing.
So I think it was early 2003 to 5 to 6, before the iPhone age.
Before the BlackBerry went bust.
I think it was with the BlackBerry bust.
So when BlackBerry busted around the time
so
that
with
whole
the
market
BlackBerry
changed.
you got access to your email, but if you want to surf on your mobile browser, it was to the portal of the mobile operator, and
Right.
the content that you had is just what they have provided you. Same way will be with
That's
credit. Okay, maybe now they are the only players in the game, but very very soon a lot of type of lenders and players that you did not or you could not think of will enter into the game of mobile banking or mobile lending.
And then you're gonna. But do you think people are gonna use? So you'll use a loan to buy your phone. I get it. What other things do people use loans for? I mean, I'm probably not even aware of it when I think about it.
So there are use cases with the retail stores, and there it comes with enrichment data. So
what do you mean?
With the big retailers, so you have a membership card of Target or Best Buy, right?
With a credit card part of it,
or
just the
with
membership,
or without, whatever,
Okay.
right? And you have a lot of information. This information can contribute into your credit ranking. So we were talking about bad data and good data.
Right. I wanted
So
to ask
this
you
is
about
the good data. That's in many cases, lenders are not able to take into consideration when it comes to credit scoring.
What's the good data?
The good data is not my defaults or my legal sues or whatever. So good data is how good I was taking those loans, repaying those loans, getting into a new job,
Okay.
getting increase in my salary. I can start predicting those data points in real time or considering those data points into the ranking model.
What's bad data?
Bad data is that I did not pay my utility bill.
Why is that? Why is that bad data?
In a pattern,
Okay.
it could be
So
contribute a lot of insights to lenders.
the data itself is negative data. It's not that the data isn't good. It's just not positive.
Yeah.
Gotcha. Okay.
Sorry.
All right. I understand.
Yeah. Sorry. So it's a negative data and positive data.
Okay. All right. So I'm with you on it. Okay.
Yeah.
I misunderstood the way you were using it. So that makes perfect sense.
Yeah.
Okay.
Yeah.
So now.
So I can give you an example. You asked for an example. So we have here in. I don't
show
know
your
if you
phone
saw in the, if you if they can see, but what we have here is that we're working with car dealer, car company, a very large and well-known company in Israel, and the user just going through the different options. I will choose. I want to buy a Toyota. I search for my car, and then I get some models. I choose the Land Cruiser, and with the information about the car, I get this piece of code that it is our piece. And we are able to show you. So if the car costs 26,000 shekels or dollars or whatever, here with a click of a button, you're just getting the finance immediately at a level of 600 shekels.
And that's your app. That's your app.
That's
Or your data?
That's one of our apps that are run on top of the technology. So
Okay.
we know the user, we have the information about the user from the credit data, and we're able to
Automatically
rank
price
and,
it.
automatically in real time rank and price it.
Do you know in the U.S. that takes like 45 minutes at least? And I don't know if it takes 45 minutes, but every time I've walked into a car dealership, it takes about an hour. And I think it's half the time it's because some guy's in there making coffee and scratching his head. But
Seconds.
that's I've never seen anything
Seconds.
that fast for a car.
And you don't have to do anything to provide any information.
Wow. So the user registers with you, and then they can get
And
a
it's
loan
a
for a
breakthrough
car.
in Israel. So in Israel, if you want to take a car loan, you have to fill out like forms
Same here.
with hundreds of attributes and information
Well, not that
to
much.
provide copies of documents
Oh wow.
and everything. It's so complicated.
That sounds like a very difficult process. Israel's famous for bureaucracy. I guess that's an example. So you're really cutting through all of the nonsense, and it's amazing to me it's amazing that you can have that percentage of accuracy based on this data, and it really seems like it's the future. So tell me this, and we can end on this, although I kind of want to hear a little bit about how you ended up on your entrepreneurial path. So maybe we'll end with that. But for the strict focus on the business models that you're doing right now. So do you see this as it strikes me that there's some negatives, but there's a lot of net positive to using this data. What do you see as the positives and the negatives of having more of this data available? And then this is just in general.
So yeah, I think that so I'm not that confident that it's always doing good, but I think that the way we are trying to look at it is that obviously that with better data, good borrowers are just getting getting their better and better their position, right?
Right.
So and bad borrowers have a lot of difficulties. The example I just gave you, that now my bank could see the broader picture of what is going on with me on other banks as well. Okay, so if I'm a bad borrower, I cannot now go to two different banks, or my credit card company and the bank and another lenders, and get just more and more loans. So one could think about it, it's like, hey, what you're doing here, you're just taking those low income people and just making their situation worse. I believe it's not. So I believe the truth is somewhere in the middle. Although those families must have access to capital, and we believe on facilitating or using the technology in order to facilitate more and more access to capital, I think that it is not a wise idea to give those families too much loans that at the end of the day they will just drown under all those debts and loans they have.
I mean, that's a fair point. Isn't that what happened in the collapse of the markets in 2008 in the U.S.? I mean, you had borrowers that weren't creditworthy taking out more than they can afford, and there was enough bet on it that it crashed the financial system.
So obviously there is an immediate effect on the families themselves, but there is as you just say, there is a huge impact on the overall economy, you know.
Well, it's bad, but it's bad for the families
It's
because
bad
they
for the
lost their
family.
houses,
It's
and
bad.
it's bad for the individuals, and it's also bad for the economy.
Yeah.
I don't really, I'm not making a distinction there. Quite frankly, from my perspective, it's bad all around.
Yeah.
All right, so let's get to this. So, what is your biggest business lesson you had in your life?
My biggest lesson. Wow,
Yes.
it's a big question.
It is. Condense it for me. Give me what you think would be
Never
if there
give
was.
up.
Okay, there you go. Never give up.
Never give up. So throughout all the 20 years that I'm an entrepreneur, and I had a lot of businesses that I was failing and others that I was succeeding, either selling or they are keep working and doing business well. I think that the common link between everything is never give up. And the example I always give is you have to be a cockroach.
A cockroach. Oh, that's an analogy. Let's
Yeah,
hear it.
it's
Take
an
it to the end.
analogy.
Take it to the very end. I want to hear
So,
this.
Cockroach is someone that whatever happens to it, it never gives up. It will survive. It will find a way to go around and to sneak out of the things and to try to get his situation better.
I never thought of cockroaches that way, but you're right. I think of them as something to step on, but
yeah,
you're right.
it might be, cause for some people to think about
All right.
nice things, but
I like it. Now here's another one, and you can feel free to say, Jason. I'm not going to answer it, but what was your biggest mistake as an entrepreneur? Because you learn from those. Those are the best lessons. Your biggest mistake, or your most memorable one. How about that?
I think that I did not cut things immediately, and I was waiting for things to get improved, and we figured out that we were wrong. So if you fail, as everybody says, cut lost and fail fast.
I love it. Excellent. It works on both sides. The most important lesson and your biggest mistake.
Yeah,
it's kind of the same.
most. So the cockroach thing is more your characteristics and the way you are as a person going through all those ventures and initiatives. But sometimes they cut loss or fail immediately. It's not just with the venture or the startup. Sometimes it's with people.
That's a very good point.
So don't wait for improvement when your hunch says it won't happen.
I love it. All right, Alon Tzipory, are you on Twitter?
I'm on Twitter. It's
What's your Twitter handle?
Strudel A Tzipory, ATZIPORY.
All right. Did you say strudel? I love it. That's okay. At. It's so
We call it
brilliantly,
Strudel.
brilliantly
It's
Israeli.
Strudel.
At A Tzipory. Okay. At A Tzipory.
A Tzipory.
Okay, great. Okay, excellent. And we'll put your website up for Bridgez,
Thank
and
you.
then we'll put your Twitter handle and all your stuff on there. And if you've got any
Okay.
materials that you want to put in, we'll add a link to them as well at the bottom of the YouTube. So
I would be
thank
happy
you,
to.
thank you for joining us.
Thank you.
Thank you for coming,
Thank you,
Alon.
Jason.
It's great to have you.
Thank you.
Well, it's been 5 long years of this permanent